Welcome back to the Traders Network. I'm Michael Yorba, your host. Thanks for joining us. We're also streaming to you live on yorbamedia.com. All right, my next guest is somebody that everybody on the show knows, Nick Santiago. This guy's hit it out of the park more often than most people. And, by the way, Nick, nice job on that J.P. Morgan short. God.
Well, it was just a little alert to your listeners, that what was going on. I had no idea that the stock was going to tumble 2 hours after we spoke about it. But again, it's just the charts are everything, and if you can read them and understand them, they'll tell you just about everything you need to know. And if you're wrong in a small way. And that stock really has it's taken another real beating today again.
Now, before we get too far, and we'll stay on the J.P. Morgan. Give our audience just an idea of when you started to short this stock.
Well, it wasn't even so much that shorting it. It was just I was shorting the market, and off of J.P. Morgan and things like Apple Computer, when the stock was trading around $45. So, when we saw that it started to roll over, you started to get some lower tops. That was where we said, "Wow, this thing's done." Also, I have some methods that I was showing traders why I didn't think JPM could get really over $46.50, $47, and I said this is where the stock would, really come into some trouble. The same with Apple Computer, or Apple Inc. as it's called now. But I had told traders, this thing can't go anymore. This is crazy. This is a little bit of a euphoria phase here, but before a blow off. And it's just all about using the charts, but both of them were right at the highs, and whether you short JPM exactly or you short the financials in another ETF or something like that, it all you just want to follow JPM because it's a leader, and you want to follow Apple because it's the leader. So
okay, what do you have on your radar for JP Morgan going forward?
Well, I really don't see much for this thing right now. I think it's actually going to go lower. I mean, last week we talked about this going down to around the 28 level, possibly 27, 28. I think that's where it's headed. So I wouldn't get in front of this thing with a 10-foot pole right now.
Got it. All right, I agree with you. All right, we got a couple of questions stacked up here in the shout box for you. Let me read them off. First one, they want me to ask you if the Fed has a chance of announcing QE3 in the next meeting in June.
No. The Fed has to save that bullet. They've right now, if the Fed were to come out with a QE3, I think that it would probably, even in the month of June, which could be a pivotal time, they're shooting too early. The Fed really needs to come out with a QE3 in the fall season because there are too many traders playing the seasonality trend right now. The Fed has to get the most bang for the buck. So watch for a QE most likely probably sometime late fourth quarter.
Okay, late fourth quarter, not at the October.
Well, it could be in October. It would be somewhere there, but they're going to try to hold off as long as they possibly could. But it's coming. It's coming.
Okay, the next question, Nevada's got one for you. He says he wants to know if you have any kind of a target date for a cycle bottom, and I'm sure he's talking about the equity side.
Yeah, ultimately, I think, as I mentioned on your show last week, I think the S&P is going lower for a long period of time. We're going to probably get a significant trading bounce maybe in a few weeks. I think that could happen, but ultimately I do think we're headed lower for quite a while. Okay,
now you also wanted to bring up the U.S. dollar today.
Yeah, I wanted to bring up the dollar because that's something I've talked about candidly on your program for a while, how if the dollar goes up, the market goes down. The dollar actually broke out, but it is now overbought. So, just realize the dollar needs to pull back in. Ultimately, after a pullback, I think the dollar can go higher, especially with the way this thing has shot up with the type of volume on the futures, on the dollar future. So I'm under the impression the dollar is going to go higher throughout 2012, weaker in 2013, obviously, but higher in 2012. But at this stage of the game right now, I mean, we got to look for this thing to pull back a little bit. It's had just a huge move, and it's very strong right now, but at this point, I got to look for a little bit of a pullback soon within the next couple of days.
Any support levels you're thinking about at this point?
Yeah, I mean, if the dollar can make its way back down, the dollar index futures, the M contract could make its way back down to around 80. I mean, that's a real that'd be a real attractive level to get back in that thing.
Okay, and the upside after that?
Oh, it's 85 now.
Okay, got it. All right, what about the GLD or the gold market?
Okay, GLD is actually staging a pretty good bounce today. I think I was on your program a couple weeks ago and we talked about some levels, and I said, that 150 level is going to be very, very attractive for a bounce. But that's all this is, in my opinion. Gold getting a bounce. Dollar goes higher, gold goes lower. Today, gold is definitely rebounding nicely, but I think it's just a short-term bounce, and before gold heads back down to that, to possibly lower new lows. So we'll give gold a short-term because we came down into the December 29th pivot. We'll give gold a short-term bounce here, but that's all it's going to be, is just a short-term bounce.
Okay. Do you have any ideas where it may go on the turnaround? The sell side.
Right now, the GLD has potential to trade up to 160, maybe even as high as 161. But after that, it's going to come back down, and it's more about time than it is about price.
Okay, I got it. All right, and time then, all throughout the, are we looking into the fourth quarter, or you think?
Oh yeah, you're going to look into the fall, sometime into the fall.
Okay, so short the strength into the fall on the gold market.
Yeah. I mean, right now, that's gold is when gold declines, it signals deflation in the overall stock market. When gold advances, it tells us that we're probably due for a little bit of an inflationary pop, and I think, with the dollar being overbought, if the dollar pulls back here, you're going to get a little pop in the market because we are severely oversold. Although I do think we're probably going to go lower before we go higher, a little bit lower probably. Okay.
All right, now Apple.
I wanted to bring up Apple today because this was one, I remember when it was going over $600, people thought I was crazy. But Apple's breaking down today. But this is another one now starting to get into oversold territory. So the stock will have a little bit of support around the 517 level. Maybe it gets a little bit of a bounce around there. 520, 517 is what I have. But after this, I ultimately believe Apple's headed lower. So, just a short-term bounce. Don't believe the hype. Apple's going to come down like the rest of them. It is still a human stock. It doesn't just trade up in the stratosphere forever. But watch for a little bit of support coming up here. Apple's had a real good decline already.
Okay, last but before we go, this is a private question for me. The banking index, I'm feeling it's a little weak here. What do you think about it?
It's very weak. A lot of people talk about the JPM debacle, but that's not the big news. If you look a couple of weeks earlier, Prudential reported a loss, and the stock got hammered. Ticker symbol is PRU, and you could see that easily on a chart. That was due to a derivative loss. So I think there's more of these derivative problems out there right now. JPM is not the first one. Prudential was the first to report it. So if there's one cockroach, there's usually, a million. I did grow up in Brooklyn, New York, and I've learned that when I was a kid.
So the notes, these that people are trading, those ETFs and ETNs. Here's the question I've got going forward. Do you think that because of the fragility of the banking industry that we could see possibly a derivative default in the notes?
Well, anything is possible. These, depending on, I don't think it would be due to the ETN or the ETF. I think that these banks hold hundreds of billions of dollars in these derivatives. Some say there's actually hundreds of trillions in derivatives. So, nobody really knows what this market really entails. What's the underlying toxicity there? So again, it's marked to model these days. It's not marked to market. JPM had to come public with this, but the truth of the matter is they probably knew about this months ago.
Got it. All right, before we go, give everybody a way to get into that trading room and watch you trade.
Yeah, come on over to In the Money Stocks. You could take a 7-day free trial to our intraday stock chat. You could see our screens, ask us questions throughout the trading session. We'll be happy to tell you everything that we're looking at and show you the trades we're doing. Also, come into our research center. You'll get our nightly setups. You'll get our videos. You'll get all of our market reports, all of our trade setups. And also, Michael, this weekend on Saturday, we are hosting an In the Money Stocks methodology webinar. It's a 7-hour event, and You'll learn all of our proprietary techniques and everything we use, from cycles, time counts, and all the things that we use to navigate these markets.
Thank you, Nick. Appreciate that.
Have a great one, Michael. Thank you.
You too, everybody. Nick Santiago, President and CEO of InTheMoneyStocks.com. Go to that webinar this weekend. You'll definitely be happy you did. All right.